Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money world without needing a finance degree. Today, we're diving into BrightSpring Health Services' latest quarterly report, Form 10Q. Get ready because this one has some interesting moves, divestitures, and a whole lot of numbers to unpack, including a look at their massive revenue streams. Before we dive in, if you appreciate getting the straight dope on corporate filings, make sure you are subscribed. And hey, if you want to chat more about these kinds of reports, we've got a Discord community linked down in the description below. So come join the conversation. Alright, so BrightSpring Health Services Inc. is giving us the financial lowdown for the period ending the 30th of September, 2025. They're a company that is all about healthcare services, focusing on people who need a bit more care, especially seniors and those with special health conditions. They're big in both pharmacy solutions and provider services, basically managing medications and offering home and community-based care. Let's look at their balance sheet. It's like a snapshot of what they own and what they owe. As of the 30th of September 2025, total assets were around $6 billion. Cash and cash equivalents, that is their readily available money, is about $140 million, a decent jump from December 2024. Accounts receivable, that is money customers owe them, is over $1 billion. That is a substantial chunk, and they've set aside some for potential bad debts. Their property and equipment, after accounting for wear and tear, is valued at about $175 million. Now, here's a big number. Goodwill is sitting at a hefty $2.3 billion. Goodwill is basically the premium they paid for past acquisitions above the fair value of the assets they bought. It shows they'd been busy buying other companies. Intangible assets, things like licenses and brand names, add another $521 million. On the other side, total liabilities are around $4.2 billion. A big chunk of that is long-term debt, sitting at over $2.4 billion. So they owe quite a bit, but they also have significant shareholder equity, which is about $1.8 billion. This tells us that while they have debt, their owner's stake is substantial. Now, let's check out their income statement for the 3 months ending the 30th of September 2025. This is where we see how much money they brought in and how much they spent. Total revenues were a massive $3.3 billion. That's up from about $2.6 billion in the same period the year before. That's a significant jump, over 28%. Most of this revenue, nearly $3 billion, comes from products, largely pharmaceuticals. Services bring in another $367 million. The cost of those products was $2.7 billion, making the gross profit a respectable $392 million. Selling, general, and administrative expenses, that's their overhead, ran at about $304 million. This leaves them with an operating income of about $87 million. And the big picture for net income, what's left after everything, was a gain of about $55 million for this quarter. Compare that to a loss of about $9 million in the same quarter last year, and you see a big turnaround. Looking at the 9 months ending the 30th of September 2025, total revenues jumped to over $9.3 billion. That is a strong increase from almost $7.3 billion in the same period last year. Net income for these 9 months was about $111 million, a massive swing from a loss of $35 million in the prior year. Let's drill down into the segments. Pharmacy Solutions is their giant. For the 3 months ending the 30th of September 2025, revenues were almost $3 billion. That is a huge 31% increase year over year. This segment handles all their prescription fulfillment, and it is clearly booming. The profitability for this segment, called Segment EBITDA, was $141 million, up a solid 42%. This shows this part of the business is growing and becoming more profitable. Their other major segment, Provider Services, which includes home health, rehab, and personal care, brought in $367 million in revenue for the quarter. That is up about 9%. While not as explosive as Pharmacy Solutions, it is still healthy growth. Segment EBITDA here was about $60 million, up 16%. This segment is also growing and contributing positively to the bottom line. Now, something important is happening with their community living business. They announced back in January 2025 they plan to sell it off. This includes home and community-based waiver programs and intermediate care facilities. They expect to close this deal in early 2026. Because of this plan, the financials for this business are now reported separately as discontinued operations in their financial statements. This division generated about $314 million in revenue for the quarter and shows an operating profit of around $31 million. Selling this will allow BrightSpring to focus more on their core pharmacy and provider services for seniors and specialty patients. Looking at the 9 months, Pharmacy Solutions really shines with revenues of over $8.2 billion, up 30%. Provider services also grew to over $1 billion for the same period. Let's talk about adjusted EBITDA, a way companies try to show their core operating performance without some of the one-off costs. For the third quarter of 2025, adjusted EBITDA was $160 million, a significant increase from about $117 million in the same quarter last year. For the 9 months, it was $434 million, up from $330 million. This shows that the underlying business is performing strongly, even with all the other numbers flying around. They also mentioned some ongoing legal matters. A big one was the silver matter, which they settled for $120 million, paid out over a couple of years, with the final payment in April 2025. This was a significant legal headache, and it is good to see it behind them. When we look at debt, the first land credit agreement is pretty substantial, with over $2.5 billion outstanding. This is a common tool for large companies to fund operations and acquisitions. They've been refinancing and managing this debt, which is typical. They also had these things called tangible equity units, or TARTs. These were part of their IPO in early 2024. They're a bit complex, combining a stock purchase contract with a loan. Essentially, they raised capital through these, and they have convertibility features and repayment schedules that affect their financials. The key takeaway here is that these units represent potential future dilution of stock or a debt repayment obligation. Now, onto the risks. The report lists a lot of things that could go wrong. They face tough competition in a highly regulated industry. Changes to Medicare and Medicaid payments are always a big concern, as a large part of their revenue comes from these government programs. They also rely heavily on recruiting and keeping skilled healthcare workers, which can be a challenge. Plus, there are always risks related to data security, malpractice claims, and keeping up with all the legal and regulatory requirements. It is clear they operate in a complex and challenging environment. When companies talk about adjusted EBITDA and adjusted EPs, they are trying to give you a clearer picture of their ongoing business performance by removing specific items like acquisition costs, restructuring expenses, or certain legal settlements. BrightSpring is doing this to show that their core operations are strong. The numbers we looked at earlier for revenue growth and profitability are pretty impressive, and their adjusted EBITDA and adjusted EPs paint an even rosier picture when some of these one-time or unusual items are removed. Looking at their Pharmacy Solutions segment, the revenue per prescription dispensed jumped significantly. For the 3 months ending the 30th of September 2025, it was $274, up from $208 the year before. This is a huge increase, suggesting they are either dispensing much more expensive drugs, or they've successfully renegotiated contracts to get better pricing for their services. In their Provider Services segment, the average daily census for home healthcare increased about 3%, serving more patients. This growth, coupled with rate increases, is driving revenue in this area. When it comes to cash, they have total liquidity of over $617 million at the end of September 2025. This is a combination of their available cash and their unused credit lines. This gives them a good cushion to handle short-term needs and unexpected expenses. In terms of my take on BrightSpring, they're showing some serious muscle, especially in their Pharmacy Solutions segment. That revenue growth is eye-popping, and the improvement in profitability and adjusted EBITDA clearly indicates their core business is firing on all cylinders. The decision to divest their community living business seems smart, simplifying their operations and allowing them to double down on their high-growth areas. They're managing their debt reasonably well, especially considering their size and the capital-intensive nature of healthcare. However, the reliance on government programs like Medicare and Medicaid always carries a risk, as policy changes can significantly impact their top and bottom lines, and keeping labor costs in check while attracting talent will remain a constant challenge. Overall, BrightSpring appears to be on a solid growth trajectory, successfully integrating acquisitions and streamlining its business. The key for them will be continuing to navigate regulatory changes, manage labor costs, and leverage their integrated pharmacy and provider services model to capture more of the value-based care market. Alright, that is our deep dive into BrightSpring's latest financial report. What is your take on these numbers and what they signal for the company's future? Do you think their focus on specialty and senior care is a winning strategy? Let me know your thoughts in the comments below. If you found this analysis valuable, smashing that like button really helps us out, and be sure to subscribe for more breakdowns like this. And don't forget to join our Discord community, linked in the description to keep the conversation going. Thanks for watching, and I'll see you in the next video.